Hey everybody, good to be here today. My name is Brent Moors, and it is time for Exploring Thinkorswim. Today we're going to talk all about options, how to place single option trades, multi-leg option trades, view option statistics, and place order-based trades, view different options on the platform. So if you want options, we got that today. But you know what? I'm not here alone. I'm here alongside my friend and colleague, Ms. Barb Armstrong, who's helping me out in the chat today. By the way, she teaches a wonderful class, Getting Started with Options. If you are newer to options, check that out. Even if you aren't newer to options, check that out, Getting Started with Options. She does a great job with that class. We're both on X, formerly known as Twitter, at Brent Moors CS, at Barb Armstrong CS. Now, before I get into the subject at hand, let me just mention a few of our disclosures here. Options do carry a high level of risk. They are not suitable for all investors. And the information today is for general informational purposes only. And it's not a recommendation of any security strategy or chart type. Schwab does not recommend the use of technical analysis as the sole means of investment research. The paper money application, which we'll be using thinkorswim desktop, is what we'll be doing today. That software application is for educational purposes only. And all investing involves risk, including risk of loss. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. And stop loss orders will not guarantee an execution at or near the activation price. Past performance of any security or strategy does not guarantee future results or success. And with that, I'm going to head on over to the thinkorswim platform. So let's, let me just also mention this. There's a lot of resources here for you in terms of this thinkorswim platform. We have 2 webcasts that are just devoted to thinkorswim each week. Currently, one is Getting Started with thinkorswim. This is Exploring thinkorswim. I have a whole library of past information that's been archived on this class. So just check out the playlist. In fact, I'm going to refer to a couple different sessions in this. To get to the playlist, just go to YouTube, go to the Trader Talks Schwab channel, and there's a playlist tab there. Go there, you can find this class. It's down near the bottom, and you can see all the past sessions there. So glad you're here, and feel free to ask questions. I see some familiar names in the chat box. Welcome, y'all. And those of you watching the recording, welcome to you as well. So if you are live, ask your questions between Barb and myself. We'll try and get to those. I'm on the trade tab here on thinkorswim. So this is what we got here. And let me just point out some things. I'm going to be focusing a lot on this option chain that you see right here today. The default is it's going to display all the options for you. Maybe you don't want all the options though. Well, you can filter it. I usually just leave this filter off, but just realize that is there. If you just want to look at calls or puts or whatever, you can change it. I'm going to leave it on both. If you want to look at different expiration dates, just weeklies, just regular, whatever, you could just make sure you put the check mark next to it, and it will exclude the ones that you don't want. Now, I'm not going to go through all these. You can look at non-standard contracts. So what's a non-standard contract? Here's a non-standard contract. Let me just show you here. If I go to GE, notice most of these contracts are listed with the date here, and it'll give a number in parentheses. That number in parentheses is the number of days till expiration. Okay, fair enough. And then the multiplier. In this case, the vast majority are going to be 100 here on this. And sometimes they say weeklies, that's no problem, or they don't say it, that's just the normal monthly contract. But then sometimes you'll see some that look like this in parentheses. And this is, here's GE as an example. There's other examples there. Let's go to 3M. Here's 3M. You can see that. Usually these are the results of some corporate action, like an acquisition or merger or something like that. The other company often had options, and so the options get kind of brought on with this company, or some sort of corporate action. That's usually what it is. Typically, what I just tell people is these play by different rules than what you're going to be used to on the normal contracts here. These aren't that common. I just brought up a couple stocks that have them on there, but most of the stocks you look at are not going to have these on there. So very often it is just a lot of traders will just avoid those unless you know exactly what this is for and what you're getting into, then probably you want to avoid those. Anyway, so you can filter those out if you want here on this. Date till expiration, strike price, etc. So that's the first thing you can filter. You can also, and we'll be doing this some today, you can look at different types of options trades up here, multi-leg options trades. Often what I'll do is I'll just keep it on single and I'll show you why here in just a little bit. But we'll switch back and forth so you can see how to use both of those. And then furthermore, when you're looking at these, you can choose the column headers. Here I have delta, gamma, theta, vega. Let me just shrink this down on the left here a little bit, and you'll be able to see it a little bit, delta, gamma, theta, vega. Well, there's a bunch of kind of pre-built, you want to see volume, open interest, just change it right there. If you want to customize it, you can customize these. And you click on it, you can add what columns you want on here, and then you save them, okay? I'm going to cancel that right now. And then when you have that, what it's going to do is it will save it right down here, whatever you name it. So when you do name it just, my suggestion is just name the column headers with, put the title of it as whatever column headers you have. I did one with delta, theta, and implied volatility there. So when I click on that, delta, theta, implied volatility, bid and ask are always going to show. Okay? So we'll hit that up a little bit as well. The other thing before I actually start looking at options trades here and different options contracts is you can control the number of strikes. Sometimes you may not want as many. It makes for a neater page when fewer are showing. But let me do SPX. Here's the S&P 500 here for a sec. And here's 4 contracts. But if I go to all, there's a lot of contracts. And maybe I don't want to scroll through all those. By the way, on this, you can also put in whatever number you want. Okay? It doesn't have to be one of these numbers right here. If I want to do 21 contracts, I can type in 21 right there. Okay? So I'm going to narrow that down here and just look at this. If I want to do an option trade, okay, let's start with the most basic option trades that you could want to do, and that is probably just a single option. In other words, if you want to buy a call, go to the calls. The calls are on the left, and you click on the ask price. Ask price to buy. Just a simple click with your mouse. It brings up that order right there. Let me actually go down to an individual company here instead of an index. But if I want to buy, I'm going to click on the ask price. If I want to sell, I want to click on the bid price. Let's say I want to sell a put. Go over to puts, go to the bid price, click on that, and this brings up an order to sell that put. The kind of this reddish color, this reddish pinkish color means it's a sell. The green, and maybe I wanted to buy it, you can always change it down here. Change it to buy, it's going to make it that green color there. That's easy enough to do just a single option trade. If you have any questions, please let me know. Now, Ted said, let's see, if you change the filter for the option change, does that filter remain in place until you change it, or does it go back to the default? That should stay in place, I believe, Ted. I have to be honest, I'm not 100% unsure that. I think that should stay in place there for you there. Because, and I'll tell you why I say that. Because if I go to and change this from spread single to spread vertical, that stays in place the next time I bring it up. And so I don't see why this would be any different there. All right, good question though. All right, let's go and talk about doing maybe more complex trade. Instead of just a single option, I want to do a spread, a vertical spread here. So I can go up here to vertical. I can click right here, and I clicked on the wrong thing. Evidently, what did I click on? Click on vertical right here. I don't know why that changed. And notice it now gives me two strike prices because I switched it to vertical. There's two strike prices. And the strike prices are $2.50 apart because that's what the strikes are. The strikes are $2.50 apart on this particular stock. If I go to a different stock, let me go to AT&T, there's strikes every dollar. So in this case, when I do vertical, it's giving me two strikes that are $1 apart. Well, what if I don't want them to be $1 apart? Well, here's a few ways to go about it. One, you could just click on this. It's going to bring up the wrong one, but it's easy enough just to switch it right down here. Okay, that's an easy way to do it. Okay, another way to do it is say, well, I want to view these $2 apart. You can go up here to where it says spread, go down to deep and wide. This is a vertical spread, so it's only 1 month's worth of time. If it's a calendar or diagonal spread or something like that, we may do 2 months or 3 months or whatever. Here, it's only 1 month. We're looking at the same expiration date because it's a vertical. And instead of one strike apart, I can say I want it 2 strikes apart here. Click on vertical. Now look what happened here. They're $2 apart from one another. Okay. So that's a way to switch that. Practically, I'll tell you what I do. Doesn't mean you should do it, but what I do is I make ample use of the control key on my keyboard, because what I do is when I want to do a trade, I can click on the one leg I want, then I can just hold down the control key and click on the other leg I want, and then it brings up both legs. Now, you may be saying, why'd you hold down that control key? Well, the answer is this. If you don't hold down the control key, it's going to replace the first option you clicked on with the second option. In other words, if I click here and then I click on the other strike and I don't hold down that control key, you see it just replaced that first one. So that's true for whatever trades. If I want to do, say, an iron condor, okay? What can I do on the iron condor? What I can do is I can click down the one I want to sell. I want to sell this 23 put, for example. And I want to buy a 22. I'm going to hold down that control key. And then what I'm going to do is I'm going to go and I'm going to sell my 24. I'm going to hold down my control key. And I'm going to buy my 25. I'm going to hold down my control key. Voila! I just created an iron condor and I never even changed it up here. Now, I could, if you prefer, just click it up here. Let me get rid of this and click on what you want. And you can click on it right there. And there I'm selling an iron condor as well. You can always see that right here. Now, when you start to build these, it will create that for you. But if you start to build something that doesn't like fall in one of these discernible categories, let's say I click on this and I hold the control key down and let's do another one. There, I just did this trade that isn't like really a common name, something we'd name as a specific trade like a vertical or calendar. It just labels it as custom. Labels it as custom there. Okay? So that is entering, that's how you can enter an order there. Let me just double check my chat. Okay, George brought up a great point. One advantage of entering the legs one by one, as I suggested, is you can see like Greeks there, for example. So, for example, very often when we're doing, say, a short put vertical, one way to determine what strike price we're going to choose for that vertical is we'll look and see what the delta is on it. And let's say I want a delta in the 30s. Now, if I've switched this over to vertical, this is not telling me the strike price, the delta of any particular contract. It's showing me the difference in delta between my two strikes there. But that's not what I want. I want to actually look at the Greek on a particular contract, in this case, say the 23 contract, I can see that, and that doesn't get obscured by me clicking on spread with some complex trade. So I do appreciate you suggesting that, George. The other thing is I can see, as George mentioned in the chat, you can also see by going to this single contract, I can see the individual bid-ask difference there, the bid-ask spread, the difference between the bid price and the ask price on these individual contracts. And though I think that's a valuable way to identify the liquidity of the contracts, rather than once you start to do, say, an iron condor, it gets a little bit more obscure in there. Okay? So let me go back here and let's move on to our next deal here. Okay. Sometimes when you're doing a trade, well, before I get on to rules-based orders, let me mention this. Maybe you want to buy a contract and you want to do a stop order on it at the same time. Put a sell stop the same time you're buying it. What you can do is you can just right-click on it. I'm taking my mouse. You can't see my finger right now, but I'm right-clicking. I can go to Buy Custom with Stop. Now, what's it going to bring up? It's going to bring up both the buy order and a sell order. And because I did with stop, it's going to make it a stop. I still need to tweak it, right? I need to say, well, I don't want this to expire at the end of the day. I'm going to make it GTC or good till canceled. I'm going to put that stop in there. And this is an extremely low priced option I clicked on. So you can put in your stop price there on that. But just realize when you're doing stops, when you do a stop, it doesn't guarantee I'm going to get out that price, right? There may be no one willing to buy it for that particular price at that point. So that's no guarantee we're going to get it. Stops aren't guaranteed in that regard. Now, similarly, let's say I want to buy an option. We'll switch it up here. We'll try Microsoft here. I want to buy an option and we'll buy a put, for example. And I want to put both a stop and a target on this. What I can do is I can click on right-click on the ask price that I want to buy. I can go to Buy Custom with OCO bracket. Now it's going to bring up 3 orders. The first order in green is my purchase order. The second order is a sell order for that, and it's a limit order. In other words, that's a target price. Let's say I want to get out if this hits $15. Okay. I'm buying at $8.50, selling at $15 if things go well. That's my target price on that. That's a limit order. I'm going to make that good till canceled. Or I can put in my stop. We'll put that stop in at $5, for example. Here, I'm going to make that stop good till canceled as well. And just a note, when I do this, I have 3 orders. The first order is this green line right here, the green one. This one that says a limit is my target price, and the stop is the price if it goes against us. We don't want that to happen. And that is true, by the way, if I'm doing, say I'm selling an option. Okay, let's say I'm going to sell a put and I go and I sell this with a OCO bracket. So here I'm selling this up front. You can tell that's kind of this pinkish reddish line. That's the first one. Then I have a limit. That's my target price. Well, the target price in this case would actually be less than the price I get in, because if I sell it, I want the price to go down. Okay? We want to be able to buy back at a cheaper price than what we sold it for up front. So this is still our target. Limit is still our target. Our stop is still a situation where we don't want it to have happen, and that's going to be at a higher price there. Now, I'm not going to get too much into the weeds here in terms of order types, today, let me mention this. I did a whole class on order types here, and what I'm gonna do is I'm gonna put that in the chat. I just put a link for that in the chat. If you're watching on a recording, that order types class, it's in the playlist for this Exploring Thinkorswim webcast, October 15th, order types. Okay, I went through those different order types there. So you can review that if you like there. So let's go, and I also want to talk about sometimes with options, you want to place an order, but not have it be based off of the option price. Rather, you want to have it be based off of the stock price. So, in other words, let's say I'm just going to we'll do a call option now. And I click on, I want to buy this call option. We'll just go at the money here. But what I can do is I can say, look, I want to buy that, but I only want to buy it if the stock goes, say, above $445. Okay. So what I can do is I can go over to the right. There's a little gear. You can't see the gear until you put your cursor over there. There's the gear. I'm going to click over here, and I'm going to say, look, I only want to buy this if Microsoft. I clicked on that line. Let me just delete that here because you may not have seen that. Let me do this again. Below where it says symbol there, it's kind of a blank area. You don't see it, but once you put your cursor there, it highlights. When you click on it, it's automatically going to fill in with the underlying stock that we're looking at. And I'm going to say, I only want to do that if it marks or price is greater than or equal to, forgot what price, I think I said $445. $445. Now, once I do that, click on confirm and send, what it's going to say is, it's going to say, hey, you're buying this. I'm buying one contract of this 17 January 445 call, but only under these conditions. Microsoft marks at or above $445. Okay, let me edit this. Actually, let me delete that. You can do the same thing, and very often this is the case with a stop order. We will buy it. So I'm going to do a stop. I'm going to right click on it. I'm going to buy custom with a stop. And we say, well, I want to buy this, at current price, but I only want to get out if Microsoft breaks below, I don't know. I'm just going to make up a price here, okay? It breaks below $430. I want to get out of this option trade if we break below $430. And the advantage of doing it this way is it connects your option trading with the chart if you like technical analysis. Okay? If you don't want to do technical analysis, then it may not make any sense. But if I want to connect this and say, well, maybe I have a level here of support or something that I think it breaks. If it breaks below 430, I want to get out of that. So what I'm going to do is stop. I'm actually going to change stop to market. I'm going to make it good till canceled. I'm going to click on that little gear. And then when do I want to get out? I want to get out if Microsoft marks less than or equal to. You may have to change that. Okay. And then you put in the price right there. Okay. George says, I think you have to change market and GTZ. I may have not have done that on the other example, but that's a good point. When you're putting in the order here with the rules-based order, change it to market. Okay. Change it to good till canceled. When you change it to good till canceled, it's going to give you a little error message, actually. It's going to say, market order must have day, time, and force. But there's an exception to that. And the exception is, once you put in rules here, click on the gear, it allows it. It will allow you to have that daytime and that good till canceled when you have that rule-based order down there. Okay. Now, let's just do one more here. I'm going to get rid of this because I want to answer a question in the chat. Let's say we're going to put in an order. I want to buy and put in a stop at 50% here. So I'm going to right click on this. I'm going to buy custom and I'm going to put with the stop. Okay. I'm going to put down buy custom with the stop. So here's that, and I'm going to put my stop price here. And so this is to buy the contract, and then I can do this here. And I can change this from standard, and I could just change that to mark if I want, or ask price if I want. But standard is just our normal way we're going to do that. Click on this little gear here, and I can make this a percentage. You see this plus minus here? I'm going to change that plus minus. Click on it twice. It gives you a little percentage. It may be a little bit hard to see, that little percentage. And I'm going to say, I want that stop at 50%. Okay. So I'm going to put in minus 50%. Okay. And I'm going to make that good till canceled. And then what I can do is I can save this order if I want to do this in the future. Now, this is a percent, 50, so I'm putting this order with a 50% stop in. And I can click right here on this. When I click here, it brings up a window. Let me just move that over. And this is a custom order template that I can save. This is to Ted in the chat, ask a question. I want to do this. Now you can create whatever kind of order you want here, but you click right there and then you save it. And then in the future, when you come back and you click here, what you can do is you can click on, you can click on your, sorry, let me think about this here for a sec. You can click on, that's where I'm drawing a blank right here on this. Order limit, no. Instruct, no. Hold on one sec. What am I doing wrong, folks? This is not a feature I use that often, actually. So you can then bring up your order. I can't believe I'm drawing a blank here right now on this. It'll come to me if I keep going. If I confirm and send, wow, folks. I don't know, I'm completely drawing space in it right here. Advanced order, first trigger sequence, and well, I'll come back to that. It'll come back to me as I'm thinking about it here, where we can pull up our saved order template here on that. And let me just, that'll come to me. I don't know why I'm just drawing a blank here on this right now. But when I bring up that order template here on this, I can do that there. So, so anyway, those are basically placing the orders that you want here on this. And then remember, whenever you do this, let me right click on this, create an order template, create an opposite order. I want to find the template there though, is the problem. Create a fresh order. Okay. Oh, well, no, that's not it either. Wow. Saved order. Okay, folks, well, I'm going to move on. We're going to go here, order, start from the listing. What am I doing here on this? All right. Well, let's move forward. Okay. Appreciate you guys there. From the little disc right here. That's where you go. Oh, there it is. Yeah. You can click here, and then this is where they save. Okay. All right. So yeah, right here you click. Sorry, I was missing that. When you click right here, if you want to bring up your saved orders, it's supposed to be like a little floppy disk. You click on that, then you can go here, and then you can these are ones I've saved in the past there. These are defaults right there. And here are saved ones I've done in the past there on that, okay? So that's how you can do that if you want to save those. I actually don't do that very often, as you can tell, but if you want to save them, you click here. If you want to retrieve them, you click in the same spot right there. Okay, thanks. Okay, let's move on. Once you have orders in and you want to say, get rid of those, here's what you're going to do. Go to monitor. Here I have some option trades in. So if I go to my position statement here and on Apple, and look, I've got a long call on Apple. You guys can probably see that right here. If I just want to get out of this, the easiest way is just to right click on it, to be honest. Just right click, create a closing order, and I want to sell that. Then I could submit that. Of course, I could change that to a stop order or other type of order, or change the price on that if I want to. That's how you get out of that. Go to monitor, look at your existing positions, and you can get out of them. Let's look at hit. Here's a vertical spread I have on Dow. Okay. If I want to get out of this, what I can do is I can either click on individually, or I can shift click on both of those. If I right click, create closing order, it gives me the choice. Do I want to get out of the one short position? Do I want to get out of the one long position? Or do I want to get out of both, where it says vertical there? Okay. And then if I want to sell both, I can do that. It will load up that order for me. One note of caution on that, by the way, is if you have an order, maybe it already has a stop in. Here I've got an order with a buy and a sell. You can see that right over here. I have that on stocks as well. I have on Bank of New York Mellon. If I click on sell here, you can see, oh, I've got this stop at $73. What I don't want to do is just go ahead and sell this 100 shares of stock and not cancel my stop. So you can cancel your stop there on that if you want. Click on sell, and you can just right click and you can cancel that order. I'm not going to do it right now because I want to leave that stop on there. And then go ahead and sell that. Similarly, if I want to get rid of those orders on Microsoft, which is, what do I have on Microsoft? I have a diagonal spread here on Microsoft. If I want to cancel those, I can click on that, I can right click, and I can cancel those orders. And then I can exit, then I can look to adjust these or sell out of these, or buy back my short contract if I want, without having to worry about what this existing order there. Okay? So that's orders. Typically, if you want to get out of these orders, you're going to get out of them right here, okay? You're going to get out of them on the position statement. Now, can you chart an option? You can chart an option, although it is a little not typical. If you want to chart an option, you can just go to the strike you want. You can right click on whatever contract you want, and you can copy the symbol. That's the easiest way. Click on copy the symbol, then you can go to your chart up here. You can paste that symbol in there, and then you can chart that option in there. Not very common, but some people, that's a question I get occasionally. Now, Pascal says, it was a good segue here, because we'll go to Microsoft again. Let's talk about implied volatility. Let's talk about some of this data that's associated with these options. We talked about trading options, okay? So this percentage right here is an average implied volatility for that month's options. But if I open up that month's options, I can go up here and I can pull up the implied volatility. Here's implied volatility. And notice there's different numbers here. Let me get more strikes on here. Okay, if I pull up all, we'll go here. Each contract has its own implied volatility for that particular contract. This is kind of an average of those implied volatilities here. So you can view implied volatilities for the individual contracts, or for the month as a whole. And by the way, you can even go one step further if you want, and you can pull up, this is a study, you can go to your studies, you can pull up an average implied volatility for across the months as well. So there's different implied volatilities figures you can view, just depends on how specific you want to view those, okay? I'm hoping that makes sense there. Now, another question here is, what's this number here? This is the implied move, a 1 standard deviation implied move. Notice on thinkorswim, you don't select sell to close here, okay? If I want to sell this contract, let me get fewer contracts here. If I want to sell this contract, I just click on sell, and this would give me a short position on here. Yes, this would give me a short position. Technically, it's not a sell to close. The system is going to interpret this as just a sell position there. Now, if you're on Schwab.com, it will tell you, it will have you choose sell to close there. In that case, the order shouldn't fill if it's a sell to close because you don't have an open position. But if you just click on a sell position on thinkorswim, then you will go short that contract if you sell that contract. Okay, let's keep on moving forward here. So that's implied volatilities. We talked about that. If you want to find option prices for the future, theoretical option prices for the future, you can go up here to this menu, go to Theo price, and it makes this appear, this Theo price menu here. And we can say, well, what's my 440 put going to call? What's my 440 put going to be priced at if the stock moves, or if implied volatility changes, or if the date changes? I'm going to click here on this. Let me just reset that. And I'm going to say, what happens in a week here? I'm going to go forward. Actually, I went forward more than a week. And the stock goes, up $2. And I'm going to leave my implied volatility where it is. Once I do that, I can look at that in theoretical price column. And in this case, time expired and the stock went up, which isn't good for a put. We can see our option went from 1040 down to about 740. Okay, so we lost money on that in this scenario. Just make sure once you use this and come back to it, you reset it, okay? Because those numbers will stick in there next time you bring up your system on that. So use that Theo pricing model there to help you out on that. Let's see, we did implied volatility already. And, okay, here he said, yes, if you buy with a stop order, there are buy stop orders. And Harry, I think if you go to that orders webcast that I showed you before, that I put the link in chat before, I actually go through those, what a buy stop order is on there, or a sell stop order. You can do a sell stop order even if you don't own a position. It will get you in a position, a new short position, a sell stop order, even if you don't already own that. All right. Now, there's just two more things I want to talk about. One is that one thing that I'm not even going to get into today because it's a whole discussion, a whole 40-minute discussion in and of itself, and that is the Analyze tab. Very often, people want to use the Analyze tab. They want to take a contract, they want to look at an option trade. You can right-click it and you can analyze that tab. You can analyze that stock. You can pull it up and you can see that contract that you just did. I have a bunch in there right now, but you can pull up and analyze it. I just put a link in the chat for those of you who are interested for that Analyze tab tutorial. You can check that out. If you're watching on a recording, October 29th was the date of that webcast where I go through the Analyze tab, and we'll go through all the features here of where you can evaluate your option trade there. Okay, now, the final thing is this that I want to mention to you. And that is, coming with the new year, we're adjusting some minor adjustments, but some significant adjustments to our webcast schedule. Okay, some good adjustments. So if you like, you can always pull up that schedule, and I'm going to put a link in the chat here for you to look at. Okay, so I'm going to put that link in but you can go to schwab.com/coaching/webcast if you want. And you can look forward to January to see the schedule. But we have some new webcasts coming. Okay, we have a swing trading webcast coming. We have a trading index options webcast coming. We have a trading price patterns webcast coming. We have an after hours trading webcast coming, which I think Barb is going to be teaching that after hours one, if I'm not mistaken. And then finally, to wrap up the week, we have a market movers webcast coming. That's coming on Fridays. So we're still going to continue to offer over 30 webcasts a week. All these new webcasts and all the ones in the past that have been archived will continue to be archived. Those ETF webcasts, we don't archive there, okay? So make sure you subscribe to the channel to check that out. Now, as for this webcast, we currently have 2 webcasts that cover this thinkorswim platform, and there's a lot of redundancy between those. We have the Getting Started with Thinkorswim webcast, and we have this Exploring Thinkorswim webcast. One challenge with the Getting Started with Thinkorswim webcast is it's only a half hour long. Well, that's changing. These 2 webcasts are going to be combined into one, but it will be the longer webcast. It'll be the full 45-minute webcast. Furthermore, if you want any past sessions of this webcast, they will still be in the archive there for you, okay? So you can always go back to past sessions of this webcast. So I'm hoping that's helpful. So make sure you check out that new webcast. And that's, folks, it's like not very far away. That's three weeks away. We're starting out. We're 3 weeks left in the year. Crazy, man, crazy. Okay, everybody, thank you very much for joining me. Barb, thanks for helping me on the chat today. And coming up next, we have generating income in your portfolio. In the meantime, have a wonderful rest of the day, and we'll talk to you later. See you same time next week. Bye-bye, everybody.